Coinbase stock has gone up over 30% since I started really aggressively adding it to my portfolio, as well as also posting videos on what I think about the company. But in this video, I want to explain why I think this rally is going to go even further. Hey guys, it's Tanner Manson from Future Investing, and today I actually have a lot of things to cover about Coinbase, just a bunch of smaller topics that I didn't think I could make a single video about, but something absolutely has to be said about how much has changed about this company just within the last couple of weeks. But before we jump into all this exciting news and a potentially huge money-making opportunity for my portfolio, I do want to state that although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. Now, if you could, hit the like button down below and subscribe if you want to see more financial content just like this. First off, obviously we have to talk about this huge rise in the Bitcoin price. It's gone up about 50% in just the last 3 weeks. Now, obviously it's not just one catalyst that adds, hundreds of billions of dollars to Bitcoin's price. There's a bunch of things that have happened, and we're going to talk about them throughout this video. But potentially the largest catalyst for Bitcoin's price rise right now would have to be that the SEC actually approved multiple ETFs for both, spot Bitcoin ETFs as well as future Bitcoin ETFs, which is getting people really excited about all the opportunities that this might bring to the crypto markets. So if the price of Bitcoin rises, then our transactional revenue rises, which makes up a massive bulk of how much we take in for Coinbase's actual earnings. But that's not enough for some people, and this brings us into our next piece of news, where Christian Bolu, I think that's how you say his name, he's a Bernstein analyst, and he actually put a price target on Coinbase of $160 a share, practically cutting the company in half. As if I didn't think it was already undervalued already. I mean, this guy really thinks that the company is going to be the Netscape of the internet craze. I think he couldn't be further from the truth. I think this is the Google of the internet phase, or the Amazon of the internet phase. I mean, this is going to be a massive company, but let's go on and talk about his points and try to unveil what he's trying to say here. He thinks that because Coinbase relies too heavily on their transactional revenue, and there's other players like Robinhood that will come in and take away a lot of their actual users because they'll offer way cheaper commissions. So he thinks that Coinbase is just purely going to get pushed out just because, people are going to choose whichever is the cheapest option and end up taking all their crypto over there and not transact on Coinbase. Fair enough. I think that this is completely ridiculous on so many levels. First being that the actual switching costs from going between two different brokerages is extremely high. Think about whenever you look into the actual financial sector, whenever you're comparing two banks like Bank of America versus something like Wells Fargo. That Bank of America might actually have way better account minimums, lower transaction fees, lower everything, and yet people with Wells Fargo, I mean, that bank still hasn't died off yet, even though, they offer such higher amounts of fees on all their products, that people still stay there because the price to actually take it out and go over there and create an account over there and start up a whole new life at a new bank costs it's a high price to pay. So we're already seeing from an industry that we know very well that does not happen very often. But this is only one reason why I don't think that he's actually correct in his statement. The second one being that Robinhood is in the United States of America, okay? One country. In a very important country, but Coinbase trades in 100+ different countries all over the world. For example, I would love to have a Robinhood account and be able to trade American stocks for free here in Canada. I'm unable to. They don't give me that option, and so I can't become a user even if I wanted to. So what's my next best option if I wanted to trade crypto or something like this? I go to Coinbase. Coinbase's international presence gives a way upper hand to Robinhood, and you know what? They really cannot compete unless they actually start to expand internationally. And yet that's not even my biggest reason on why I don't think that he's correct. And the fact is that, Robinhood only cares about trying to get the retail investors to buy and sell on their platform. What about the institutional investors? What about the custody fees? What about all the other products that Coinbase has that Robinhood has not touched yet? But you must be asking, Tanner, how important is it that we have institutional investors? Isn't there way more retail investors than there are institutional investors? Isn't it more important that we try to appeal to the broader masses? No. I'll show you, for example, whenever we look at trading volumes, whenever we look at the recent quarter, Q2 for Coinbase, they did $145 billion in retail trading volume. In institutional trading volume, they did $317 billion. That's 119% larger actual, target to go after, and that's only what we're seeing right now. Let's look at how these have grown quarter to quarter. Let's go back a year, for example. Let's look at each quarter and see the differences in how they're growing. So first off, they're both starting at different paces. Obviously, retail trading volume right here starts at a lower amount. So it should be able to grow faster because it has a bigger total addressable market to grow into. Okay, so whenever we look at retail trading from Q2 of 2020 to Q3 of 2020, there's a 64% increase in their trading volume. Then next quarter, 78%. Next quarter, 275%. Next quarter, 21%. Massive, massive increases in their business. But whenever we compare that to institutional trading, we have 59% growth, 111% growth, 277% growth, 47%, quarter over quarter growth. These are quarter over quarter. So the higher the numbers are getting, from 111 to 277 to 47, this is getting exponential. This is why the market is getting to this 111% larger amount than its predecessor, which is retail trading volume. I mean, I think that this gap is going to get larger in Q3 and then exponentially larger in Q4 now that we're seeing this massive price rise in Bitcoin. And this Bitcoin rise is not because of retail trading. I mean, yes, we do bring a portion of our money into Bitcoin and it helps rise the price, but the real money that's coming into Bitcoin is institutional. And whenever it comes to institutions, the amount of money that we can make is even higher because it's not just trading volume, it's also things like custody fees and all these sorts of different, subscription revenues and all these different things. For example, Coinbase Prime. Coinbase Prime is actually their institutional trading platform for which they just added way more features to it that will entice more institutional traders to come onto their platform because it's getting better and better than the competition. This is why I'm so excited about this company and why I think people are getting it all wrong. I don't think it's that the average people like you and me who are trying to bring a couple thousand or a couple tens of $1,000s over into the platform to trade a couple of, Bitcoin or ETF or whatever, that's not actually their target. They want the people that are bringing over hundreds of millions of dollars, billions of dollars, hopefully. These are the types of people that are really going to change the platform and how much revenue they make long term. This is a way more exciting side, and I think it's why Christian's so far off from understanding how Coinbase is actually capturing the market. Now, the last and potentially even most exciting news for Coinbase is their actual announcement of their NFT marketplace. Now, whenever we look at the current NFT marketplaces and where you would go to buy NFTs today, everyone's going to know OpenSea. OpenSea is definitely the largest player in the NFT space right now, and actually, funny enough, Coinbase actually made a pretty early investment into them and does own some ownership in the company as well, so we do see actually a benefit from their revenue. But that doesn't mean that we can't start our own thing and try to take a couple users from them and bring over some of that actual trading volume and hopefully some transactional revenue as well. But for example, let's just compare these two marketplaces and see which one actually has higher potential. Now, OpenSea currently has 300,000 users on their platform, which they've traded over $4 billion in actual volume traded since 2017, which is just crazy. That makes up for an average volume traded per user of $13,000 since 2017. Now, just so you know, Coinbase's NFT marketplace right now has not even fully launched. All they've done is just say that they've announced it. This is just a couple days ago, okay? And within those last couple days, okay, so 4 days since it's been signed up, there have been over 2 million people signing up for the platform. Not 300,000 like what, OpenSea has done over the course of multiple years. This is 2 million in the course of 4 days. Now, obviously, this isn't true math, okay? But if you're trading $13,000 per average user over the course of 4 years, okay? Now try to bring that over to something like Coinbase's actual marketplace of 2 million people already. Okay, and I don't think it'll be an exponential growth like 2 million new users per every 4 days, but it could be by the time it launches 4 million users, 5 million users. Who knows by the time it's going to probably come out within the next couple months. This could lead to just that additional amount of diversification for Coinbase that really makes, additional investors happy, as well as just that added amount of revenue, whether it's a 10% ad or 15% ad, I don't know. I'm not going to speculate, but it is just going to add just that little bit more, take a little bit of business away from the other competitors, and also offer just a new cross-selling opportunity. Whenever people have this additional amount of money on Coinbase, they might be buying their Bitcoin, Ethereum, Cardano, whatever, and then maybe they're buying, their little speculative, NFTs or JPEGs or whatever, or potentially even just pieces of art that they like and want to keep long term. These are all just great pieces of news for Coinbase, and it's why the stock is just starting to really see a big spike in its price, is because there's nothing really bad coming up for the stock ever since that lending ordeal happened with the SEC. But I mean, every company in the world, from Apple, Amazon, Google, even the best companies in the world, have had products go wrong, have had cancellations, have all these things that might set it back a couple weeks. Now we're having everything go right for Coinbase in terms of what you're going to see as new users come in for Q3, more monthly transacting users, users, higher amounts of trading volume. Not even to mention, and I actually saw this in the comments, and they said I didn't point it out in one of my last videos, but that Brian Armstrong actually announced, this is back in August, a long time ago, but a $500 million approval for buying their actual, more crypto portfolios. So they're not actually selecting certain coins. They're just going off of what's most popular and having a diversified portfolio across, probably the top 10 or top 20 coins that they have on their platform. Okay, so whenever you see Bitcoin rising by 50% in 3 weeks, we know they have a extremely sizable position in Bitcoin themselves, and that's going to show up on their balance sheets within the next couple of quarters. What kind of company does this, where just on their balance sheet, they're growing 50%, on $500 million, and what they were saying is going to be 10% or more of revenue going forward? Are they going to continue to put into new actual Bitcoin purchases, Ethereum purchases, all these things, which are going up like crazy? Maybe I'm just super bullish and I'm going crazy over this stock, but I just think like they have these Bitcoin ETFs, whether it's spot or future ETFs, which we don't even know if we have the custodial actual programs on these ETFs. We could be holding those Bitcoins. We don't know what they've talked about until Q3 or Q4. They might tell us some more, or maybe Brian Armstrong will put some, tweet thread about it and we'll be able to read it early. But I mean, we're just going to have to wait and see. But regardless, even if we don't have the custodial fees on all those huge ETFs, which is it's a great likelihood that we do because we're one of the biggest players in that space. But even if we don't, I mean, just the rise in Bitcoin prices alone is just going to continue to increase our transactional revenue going forward. I'm holding this stock for a very long term. This is not a trade for me. This is a long-term position. I will hold Coinbase till the day that they actually pay me a dividend. This company will be a dividend-paying financial institution, the same way that Bank of America was, in its early days, was not a dividend-paying company. But the longer that it went on, this is what these companies do, because once they actually have their actual platform down, they understand the business that they're in, the innovation gets pretty low. I mean, it gets to just being a standard business. Financial services, and this includes Coinbase, pay tons of dividends. I'm getting in early while the price is low, which I think is now, okay, because I do actually think that this stock could go, into the years to come. I'm not saying right now, but into the years to come, into that 800, 1,000, and then potentially even if it continues to grow and these monthly active users start to get into like the hundreds of millions, or not monthly active users, but just their users in general, that you know what, this stock could be in the thousands of dollars going forward, and this could scream 10, 20x for me going forward. Call me a dreamer or whatever, but I mean, I've seen stocks like this. I was an investor and close watcher of companies like Zillow, companies like Nvidia, companies like Tesla. These are all companies that I've held through what people said were not going to work, and then people realized that they needed the services. I think it's obvious so far. I mean, the numbers scream for themselves. Whenever you're starting to 10x, and whenever you look at the actual competition, they don't quite offer such a good service as this, I mean, it's an easy buy for me. I'm extremely bullish, but you guys tell me what you guys think in the comments down below. And if you could, hit the like button if you haven't already, and subscribe down below if you want to see more financial content just like this. Anyways, guys, I do appreciate you guys coming out and watching the video. If you stayed this long, I love you, and hope you guys stay safe trading. I'll see you guys on the next one. Bye now.